Ryan Reynolds here from Mint Mobile with a message for everyone paying big wireless way too much. Please, for the love of everything good in this world, stop. With Mint, you can get premium wireless for just $15 a month. Of course, if you enjoy overpaying, no judgments, but that's weird. Okay, one judgment. Anyway, give it a try at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, equivalent to $15 per month required. Intro rate first 3 months only, then full price plan options available. Taxes and fees extra. See full terms at mintmobile.com.
Reality radio for a really great future. We're talking real money.
Hi, welcome to another daily edition of Talking Real Money, the podcast. I'm Don McDonald. Glad you decided to listen. Hope you will keep doing that. And I hope you'll call if you have a question about money, particularly investing. 855-935-8255 is our phone number. The last 4 digits spell TALK, making it easy to remember. 855-935-TALK. You can also send your questions in at our website, talkingrealmoney.com, where you can do all kinds of other cool stuff too. So go check it out, talkingrealmoney.com. This is the shorter daily version of the podcast. And today, once again, one of the things I read every day, usually for a laugh, rarely for anything serious, is Marketwatch, the dumb cousin of the Wall Street Journal. Oh, it's so awful. It's really awful. Sometimes it goes beyond awful. And apparently, anybody with a pulse and a stupid story can write for them. Like this column that came out today from a guy named Vitaly Katsenelson, Katsenelson. I don't know. Guy who graduated from the University of Colorado, which is my home state. And it's an article with advice for college graduates about investing in stocks. It's just some of the worst advice I've ever read. His first bit of advice is to find yourself. What does that have to do with investing? Find your money. Yeah, there you go. Find a good job that pays well. Then his second thing is just do it. Don't create paper portfolios. Take as much money as you can afford to lose. That's the only good advice in the whole thing, because he says you may lose it, and invest it. Here's where it gets bad. Don't focus on building a properly diversified portfolio. Wow, I set up a resonance in the microphone. Your initial focus should be on stock analysis? Really? You don't have enough time, he says, to do the research necessary to build a portfolio of 15 or 25 stocks. Just buy a stock. But invest. Don't gamble. Huh? When you're buying individual stocks, I'm sorry, Vitaly, you are gambling. Do the analysis with diligence and care. Come on. There are hundreds of thousands, if not millions of people far more adept at analyzing stocks, which include you, Vitaly. I'll get into you in a minute. I'm getting to you soon. But come on. This is ridiculous. And then it says, of course, the Peter Lynch pablum, start with what you know. Buy something you know. Learn to say, I don't know. You can't be an expert in everything. You can't be an expert in stock picking if you've got another job. Make investment friends. I don't even know what that means. And then he gives you some stupid books to read. And that's about it. Oh, he ends with this. After a series of empty platitudes, he ends with, I don't want to end with empty platitudes, but I'd be remiss if I didn't stress the importance of having an unstoppable, insatiable thirst for knowledge. Learning doesn't cease when you graduate. It continues and never stops. Wow. I guess people feel like they have to fill the empty spaces between the very simple advice that the vast majority of intelligent, analytical academics are saying over and over again, you can't beat the market, Vitaly. You can't. It doesn't happen. But I can see why you would claim that, because I looked you up. You're the chief investment officer of a company called Investment Management Associates out of the southern part of Denver, down in the tech center. And you run this little dinky firm that picks individual stocks. It even says on your website that you own like 20 stocks in your portfolio. I hope you tell your clients they're basically gamblers, and you charge them. It says on your website 1.5%. It says in your ADV Part 2, 2% per year. Whichever, you're charging them a lot of money for doing something in which you might occasionally find success just due to dumb luck. But come on, Vitaly, you are managing $100 million. There are people out there managing billions of dollars who aren't beating the market, and you believe that kids coming out of college are going to pull it off? I'd be willing to bet that even you, because nowhere on your website is there any kind of audited performance for your products. Nowhere. I'd be willing to bet that even you, after fees and expenses, don't beat the market. I don't understand why you keep doing what you're doing, because you can't be making that much money when you don't manage that much money. You haven't managed your AUM, your assets under management, have hardly moved in a decade. You must be doing something wrong. You can call us anytime at 855-935-TALK, or you can send your question in to us via our website, which is very easy. It's talkingrealmoney.com, talkingrealmoney.com, and every day I'll try to answer one of those, either a form submitted, which I'm going to do now as soon as I can find the thing I just had on my screen. And this is a really short one. So this is going to be a short podcast today. Really quick question. The question relates to podcasts. The question is, I get daily emails for your daily shows, but not for the weekend 2-hour show. Are they available as a podcast too? Well, you've been getting them. As a matter of fact, Tuesdays and Wednesdays daily emails for the podcast were for the Saturday show. We take the Saturday show that broadcasts live in Seattle on KOMO radio. We edit all the commercials and other garbage out of it and get it down to about 40 minutes. And then we put that up as a podcast. So when you listen, generally it's on Tuesday and Wednesday, unless there's a delay in getting the audio from the station. Usually on Tuesday or Wednesday, we put those podcasts up. And then on Monday, Thursday, and Friday, I create a special, shorter version of a Talking Real Money daily podcast where I take on one issue that I think is relatively important, maybe two, but generally one, and then try to answer one of your questions. So I hope that answers your question. I hope you enjoy the podcast, and I'd like to invite all of you to please tell a friend or 2 or 10 about the podcast, to subscribe to it either through your favorite podcast service, particularly Apple Podcasts, because they are the 800-pound gorilla. And thanks for listening. I really appreciate you being there. I'll be back here tomorrow with another one, if all goes according to plan. Have a great Friday or whatever day it is after you listen to this. I'm Don McDonald.
Talking Real Money. We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit talkingrealmoney.com for more information and disclosures. That should keep the lawyers happy.